Good evening. Ira Epstein with your Metal Market Wrap-Up. And this wrap-up is for the evening of Tuesday. And here we are now on the 9th of August, 2022, 7:05 p.m., getting ready to go into tomorrow morning's 7:30 CPI number. The world is going to be looking at that number. It's a big one. Be careful in the stock indices. They're starting to lose tonight. They're bullish embedded readings, which could be a sign of problems coming. If so, the market's going to be looking at the Fed to get very aggressive if these numbers are hot. Now, there's a headline number, and then there's a core year-over-year number without food and energy. I'll be looking at that number. If it's strong, near 6, a number, 5, 6, means you got that built-in inflation. That gives the Fed another path to say, I'm going at you. Grain markets today gave up a lot of the good gain they had. You were a lot higher than this in corn, up about 7 cents more, so maybe the weather's not as bad as people thought. Cotton took off to the upside off the bad weather. So let's take a look at gold and see how inflation is looking in that market and what it's going to do about it. When we look at the weekly chart, if momentum's going to continue up, why not get to the 1826.80 area? It's the 18-week moving average of closes, a neutral zone. Markets like neutral zones. Reason people look at moving averages, and by the way, they're not forward-looking, they're backward-looking. They're telling you if the market rallies based on 18 weeks of trade, past weeks, that's where the resistance is. It's not projecting where it will be next week. That's where it is right now. This rally has been labored but important. Now, where did it go to? Please pay attention. Look at where we're at back here. When you look back there, you can see that these are the resistance areas. Market fell here, and we're now getting near the top of that area. Should be some resistance seen there. On the swing line, which is an indicator I wrote so that I can easily look at a chart and see is it an uptrend, higher lows, higher highs, a downtrend, lower highs, lower lows, or no trend, got a higher high and a lower low in some sequence. This is bullish, making the higher high, higher low, until the market gets underneath 1780.10. The resistance all the way up there in moving averages, but you're knocking on the door of it in the 1830.70 area, again back into the zone at the Bollinger Band. I think the pros are going to buy breaks, because until you lose the red line under 79, as long as you don't take out the prior day's high, that's what traders tend to do. Gold-silver ratio stabilizing here, not up at 94 anymore, stuck around the 87.5 zone. The silver market is void of a trend. What do I mean? Lower and low, higher high. Got it? But the embedded reading is at work. Let's see if I can get this to work for us. No, it's not going to. Higher highs, higher low, no. Both numbers over 80 and staying that way more than 3 days. That's embedded. Copper market, trying to embed right now, telling me that on breaks, as long as the red line doesn't close under 79, the pros should be in there buying this market, but not against the Bollinger Band. Platinum, fully embedded, but I told my traders, no. The 100-day in the Bollinger Band, serious resistance on the first challenge. It happened back here too. You don't want to fight with that. And if you break in the palladium, number one, it's overbought. I'm looking for a pullback. That's why I say break. Against the upper Bollinger Band, this whole region should offer the support. Last, the dollar index. The key is to clear 106.81, stay over the 18-day average, and then the 107.30 area becomes the resistance. If the market backs off from here, look for 105.42 to be the next resistance point. So you hear me constantly talking about Bollinger Bands. Take a look at this and learn how to work with them in an advanced manner.